Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and how to make or lose some money on the internet. Loaded up for discussion. Today we have Farokh of Rug Radio interviewing Donald Trump regarding World Liberty Financial Crypto and a couple other things that have been discussed on that spaces that has reached more than 1 million people so far. We have Michael Saylor's MicroStrategy offering $700 million in convertible senior notes with the goal to buy more BTC. Also, as the third piece of news, we have DeGods pulling back 20% over the last 24 hours to a 1.6-ish ETH floor. We also got the latest on price action on crypto NFTs and some discussion on KOL awards in the Web3 space that could get a bit spicy. Today, I have Sammy with me in the co-host seat, and we are ready to get into it. But before we do that, just a reminder that nothing that we say here is financial advice. This market is very risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Sammy, how are you doing? How's the preparation for your holiday going?
It's good. Yeah, so I fly pretty early tomorrow, but still got that FOMO about Singapore. But I'll be in Italy in literally probably about 24 hours, I think we land. So yeah, excited to be there. You were supposed to be over in Singapore, weren't you, actually?
I was supposed to go to Singapore, but I had to cancel last minute, unfortunately. Yes. Are you more hyped about going to Italy on vacation, or is the Singapore FOMO increasing?
Because my partner's next door. It's obviously Italy.
Yeah, that's fair. That's fair. How long will you guys be gone on holiday?
So we're over there for about 10 days. But yeah, it'll be Amalfi Coast, Sorrento. The only time I've been to Italy before was with work, and that was, sorry, I think my phone's. Yeah, the only time I've been to Italy before is with work, and that was Rome. So it's literally conference, hotel, airport. So this will be the first cultural visit to Italy, which would be nice.
Nice. And you will be taking off from Spaces, from X as well, or will you be online as well? What's the plan?
I mean, a little bit less attached to being online, but inevitably, as we know with the space, like I kind of have to stay on top of it. Otherwise, 10 days off, like it'll take me a year to get back into the space. So yeah, going to be still connected, but probably less active than I am usually.
Yeah, I had the same feeling after my vacation to the States. Was gone for 3 weeks, and I noticed taking that off plus posting in a completely different time zone for 3 weeks basically murdered my engagement, and it took a good while to get that back.
Well, that's the thing. I had a trip to actually Singapore, Malaysia back in January, and I think just being on that time zone, because I'm used to interacting with people in the US and Europe, I think that just absolutely killed me, just because I was similar to you, up quite late, trying to juggle various commitments. And it is a challenge. It's nice to travel, but I think like in my 30s, I'm just kind of a little bit more used to having a structure and having a desk with everything. So yeah, but who knows? Maybe we'll go digital nomad at some point.
Yeah, I don't know if I could. I love the thought of like being a digital nomad, but I don't know if I could adjust to like changing throughout time zones all of the time. And I actually feel like the European, like at least Central European time or British time, is pretty favorable because you catch basically half the day in Asia, you catch the start of the day in the States. It's not a bad time zone to be in.
Yeah, you kind of bang splat in the middle. But our friend Brad, obviously traveling around the world at the moment, so he'll be experiencing it firsthand.
Yeah, here's to hear how that will go for him. I think we have quite a few things to discuss today, so let's maybe get straight into it. Let's start with the price action. I'm gonna share that on screen as always for everyone who's watching us on video, either on YouTube or on X video. It's a green day. I feel like every time when B-Check is out of the house traveling and we are hosting without him, the market tends to be a bit greener. Glad he doesn't get to hear that. BTC is at 59K, up 0.7% over the last 24 hours. ETH is up 0.6%, 2.3K ETH, 2.3K dollars. Solana is up 0.7% as well, sitting at $133. In terms of the main headlines from the snapshot, we have the Farokh interview with Donald Trump that we will definitely touch on the content, but also on the vibe of that and how we basically feel about that for the Web3 space in general. I think it was quite an impressive achievement to have that. We'll also dive into Michael Saylor offering the 700 mil in convertible notes and into more of their strategy, but also stock performance with the repeated BTC buys. And last but not least, the DeGods pullback that we just talked about. In terms of some notable NFT sales, we have the Pebbles selling for 15 ETH, which I'm just sharing on screen. We have Trump.eth, the domain, selling for 48.4 ETH. And we have a CryptoPunk with a cap selling for 32.5 ETH. Heading over to our marketplace partner, Mintify, to have a look at some of the major NFT collections. It's a bit of a flat day. Bored Apes at a floor of 12 ETH, basically unchanged from yesterday. Pudgies just up a touch, up 0.4% at a 10.9 ETH floor. Azuki's down 1% at a 5.4 ETH floor, still maintaining that momentum, still up 13% on the week. Miledes are unchanged at a 3.38 ETH floor. DeGods, as we said, down 23% at a 1.65 ETH floor, but still up 12% over the last 7 days. And the last collection that I picked out is the Flyfish Club. It's down 9% over the last 24 hours. I picked it out because it's there's this SEC related story around it. So Flyfish Club is Gary Vee's NFT collection. It was basically a restaurant membership packaged as an NFT sale. And the result of that is a 750K settlement that Flyfish has to pay, but they also have to destroy all of the NFTs which are in their possession, and they cannot earn royalties on that anymore. I found that interesting from the standpoint to see how the price action is reacting to that. And actually, given the fact that it's only down 10% on the news, is not bad at all. Curious to hear your thoughts on that, Sammy, and also see what else is standing out to you in the NFT market.
Yeah, I hadn't really come across Flyfish prior to that SEC kind of suit, but to me, it's interesting because it had a similar. Do you remember Stoner Cats when that news came out that they were being sued? It had a similar bit of price volatility, and actually, people ended up seeing that as bullish because it was a collectible. So because it had this provenance, so people actually ended up accumulating those pieces. And I wonder if this will be the same, especially if they got to burn the supply. You effectively got a deflationary asset, and if collectors want to collect and these NFTs are deemed as collectibles, then it's going to become more scarce. So it'd be interesting to see, even though it's 9% down today, I wonder what will happen in the medium to long term. But it just depends on what that utility was originally. And if you compare the collectible value versus that utility value, you just have to work out what the trade-off is. But just another comment on the general Bitcoin price. Like we mentioned that it gone up slightly, it was pretty flat. Actually, I think it feels a bit manipulated, because we've had in the past 24 hours, it dropped I want to say 3-4%, and now it's gone back up in similar sort of amounts. It's kind of done a U shape. It just feels a bit artificially moved. And I don't know if we're getting into that phase of kind of trying to shake out retail where institutions are potentially coming in. I don't know. It feels a bit forced, feels a bit unusual. Maybe that's conspiracy theorist in me, but that was quite interesting to me. And the third point, probably just on Sappy sales, they made, so Abstract actually retweeted them yesterday and said that they'll get access to some, or I think there's some sort of partnership that they're doing with them. So that's why they're up about 4 or 5%, which I thought was quite cool, quite interesting. An OG collection from 2021 getting some love.
Yeah, great observation. I have missed that completely. On the BTC side, maybe a follow-up question on that. You're seeing like when the inner conspiracy theorist comes out, you're seeing that U-shaped movement basically, and your hypothesis was to shake out retail so institutions can get in. What stage of the market does this happen? Is this early bull to you? Is this later in the bull, or where would you expect such a behavior to happen?
Well, I think it's still. I don't think we're in a full-on bull, to be honest. I think we're still in that maybe the phase where we've kind of a little bit. We're going to there probably will be some more downside. But I think institutions are going to try and get the cheapest price they can. We've got some pretty big structural changes. And I know I spoke about in my newsletter, which I published today, that there was an analyst that pointed out that a lot of the ETF inflows have been from people online redirecting their investments themselves, as opposed to these big institutions buying. So it'd be interesting when that does change and when they do come in, because I think inevitably they will, whether that actually has a massive impact. And I don't think we've seen the full impact of that yet. And I know like VanEck have put that, what the best case scenario by 2050 as 3 million of Bitcoin, maybe 50 million or 45 million was like their bull case, which was pretty wild. And obviously Michael Saylor's done a similar sort of analysis, but I think he's slightly biased, which we'll touch on later with his acquisitions. But I don't know, like maybe, I mean, it could be people responding to the news that MicroStrategy is raising again. It's hard to put your finger on it, but to me, just the downward trajectory and then the reversal just seems a bit forced. So to me, it's whale games. But
yeah, I do tend to agree with that. I also could not pinpoint it what exactly it is, but those very quick U-shape patterns definitely feel a bit artificial. Look, we have quite a few headlines to get into today, but before we do that, I want to get into the discussion of today, and I want to pick a bit more of a maybe sensitive topic, but I don't want to approach it in a way to, throw blame or point fingers, but more so from a perspective of what we could do better on that. And I want to talk about the Content Creator Awards in Singapore that have hit my timeline repeatedly in a bit of a negative light. Basically, the sentiment was that most people had no idea who the winners were, and Zach XBT also got involved in that, pointing out a specific creator. Again, don't want to name names because there's no point in doing that, saying that their engagement is very much botted, that they have more than 1 million YouTube subscriber, but all the comments, if you look under that, are bots as well. And also in connection with that, pointed out that there is an announcement by the Federal Trade Commission, which is a final rule banning fake reviews and testimonials. It's from August 14th, 2024. It also says misuse of fake social media indicators. The final rule prohibits anyone from selling or buying fake indicators of social media influence, such as followers' views generated by a bot or hijacked account. This prohibition is limited to situations in which the buyer knew or should have known that the indicators were fake and misrepresent the buyer's influence or importance for a commercial purpose. So obviously there's legal implication on the one hand, but on the other hand, there's also the question, do we even need those tier lists or content creator awards in Web3? And if we need them, how can we actually design them in a better way that this, that this is not the outcome of it? Because I do think that independent of, who the creators are who won, if people are flagging that for fake engagement, for not really appropriate conduct, it doesn't really reflect positively on the entire Web3 space.
yeah, it's an interesting one. Like I think the term KOL, I don't know, it has negative connotations, and I think, it's not necessarily deemed to be the profession that people want to go into. They just end up being called influencers or KOLs because of their influence. And I think that the term content creator is probably a better way of looking at things. If you want to create objectives where you're encouraging people to create content that's thoughtful, that's valuable, that adds value to those specific brands, and I think that's a better kind of trajectory to go down. I think that like if you incentivize that and the awards around that, and I know Open Campus did a similar one combined with Forbes recently, and they had the OC 100 where I think certain creators could apply. If you went in through the application process, it would then be reviewed by a panel of people. And I think that got a lot better feedback than this kind of award ceremony. But I do think that you've got the likes of Forbes 30 under 30, all this kind of stuff, which I think it has some reputable backing behind it. And I think if you can get something similar for crypto, then that would kind of add value and add weight to the industry a little bit more so than these KOL awards, because let's be honest, I hadn't heard of most of the people. I think I'd maybe heard of one of them. They seem to be like YouTube predominantly. But for anyone that's in crypto knows that most of the activities on X, like you've got crypto Twitter, and to not have any mutuals with these people, it just kind of, it smells a bit fishy to me. And I think you're right to feel probably a little bit skeptical about like what's their purpose in the space. And we did see some images that, I don't know, they suggested that things probably weren't like as genuine, but yeah, I'm yet to be kind of proved wrong on that, I think.
Yeah, I very much agree with that. I actually like that you pointed out the Forbes one with Open Campus. I do think that those lists can add value, especially to outside of the space. I don't think that, inside of the space for the people on the list, it might be a nice recognition, but it doesn't do anything really. But if you are outside of the space and an institution like Forbes deems crypto important enough to actually have a list of content creators in there, and if this is done well, then it's basically a good onboarding to the rest of their audience who are coming into crypto, coming into Web3 to find some reputable creators. I do think that this carries definitely some weight. Yeah.
Well, I think like the alternate approach, if you want to make it an objective point of view, you can look at these analytics platforms like Cookie3 had a similar functionality with like a marketing arm where they had they onboarded all the KOLs onto their network. They could then like rank them based on their engagement. Or you've got Fancy Top, which kind of looks at sort of KOLs or influencers or people with that kind of influence that create content, but then like removes people's clearly botted sort of impressions and likes and retweets and stuff like that. So you end up with like a pretty realistic view of like how people are performing against one another and who the top creators are in the space. And I think if you look at that, similar to, I think last year there was Inspect as well. Like there are like systems that are in place or like databases that have this information that you can then like that could be leveraged to give to brands, to then brands to like work out deals with KOLs that they think they're on point with their branding, like their personal brand. So I think that's like a good approach to do it. I don't think these KOL awards that like you haven't heard of anyone, you haven't heard of like the presenter. I looked at Zeneka's post about the invite to attend it. I think, to be honest, just to try and add validity to it. If you've got like actual known creators joining it to watch the show or whatever, it kind of adds that that verification in a way, or social validity. And I don't think that should be like, I don't know, like I think Loki made a post yesterday as well around if someone DMs you to ask you to follow back after you follow them, or they follow you, sorry, that kind of suggests that they're trying to get those mutuals in place. So then adds that social proof behind it. And I think that people just need to be careful about that because there are a lot of scams in the space. And I think we do need to try and move away from that. And I think using objective analytics and things like that to actually measure like people's performance and reward good quality content is something that should be done in the space.
Look, I very much agree with that, and I think there's an even broader perspective to take in here, plus a like multi-million-dollar business opportunity for whomever can solve that. One of the conversations that I have most frequently with founders who are pre-TGE is when it comes to airdrop campaigns, when it comes to launching their tokens and their go-to-market strategies, how do they actually incentivize real users? How do they identify if someone's reputation on chain is good or not? And obviously, we have stuff like the Gitcoin passport that looks at basically is a point system that looks at, do you have ENS domains in your possession? How old is the wallet? Do you have additional verified social channels, et cetera, et cetera? But it doesn't solve for the point that if someone's new to the space and is genuine about a game that they're playing and a product that they're exploring, how can they improve their reputation starting from zero? And what is actually distinguishing them from a bot who would have a very similar optic in the beginning by basically having a zero wallet activity because it's a fresh wallet, but being new to the space. And I think this is a broader discussion. It's a broader topic that's still not solved. And you mentioned absolutely correctly that Fantasy Top is filtering out bots and is doing their best to do so. And they went to an like iterative process, improving it every time because it's not very straightforward to filter out illicit activity. It's easy when you look at a post like on a singular basis to be like, oh yeah, this looks very botted, very shady to me. But it's difficult when you want to do that at a large scale, I think.
And I think it becomes harder when, like, you and I post all the time, like we know when something's botted or not, and you can spot from a, like, you know what the rough ratios should be from like likes, retweets, comments, impressions. And if it's like wildly off, then you know something's wrong and you'll investigate further. But I think that if you're able to automate it in a way that can filter that out, that would kind of, I mean, that the person who creates that platform is going to make millions. And I think that ultimately you have like an agency or commission model to connect people. So, but just on the point about new people who are genuinely interested entering the space, and I think this comes down to, I genuinely believe that you have to kind of build up that trust over time and that on-chain credibility. It's similar to like a credit score in the real world. I think you still need to, if you are genuinely interested to stay in the space and do good things, then you need to build up that on-chain history. And maybe at some point people might start selling old wallets to people to have that, because I think that we've spoken previously about airdrops, and by having certain on-chain activity, you get allocations to airdrops, and that has some value. So it'd be interesting to see how the industry evolves over time. But I mean, we've seen Saigar post about the Abstract wallet. I think Blast is similar with Pac-Man. So these wallets might change completely. So like it might be hard to then see if you have a full stack wallet. People might not need that on-chain trust because they just know that they've gone through like a KYC process, or there might be some sort of other verification process that can kind of connect their off-chain sort of credibility to on-chain, and then you can start rather than starting completely from scratch. So I think there's a number of ways to do it, but it'd be interesting to see how that evolves over time.
I like the credit score analogy a lot, at least in how credit scores are working in Austria. Obviously, you do not start with the best rating, no matter your income. Your rating is actually improving when you take out a credit and pay that back on time, because you have shown you are to be trusted with debt, and you are good in paying that back, and you're not starting with like with a stellar reputation. I feel like if you come into Web3 and you have to build it up, because many protocols are thinking or are already doing that, they're rewarding more trustable users at higher rates, that we just have to accept that as a part of your onboarding journey, that you can't join a space and be rated as triple A stellar reputation user that gets to enjoy all the benefits that people who've been around for years and have built up the reputation get to enjoy as well.
But I mean, the benchmarks don't have to be particularly high. And I don't think they need to be transparent about what protocols are looking for that. And each protocol that is maybe looking to interact with these people will probably have different requirements. Like it could be as simple as like making 3 transactions, being older than a month old, and stuff like that, which I don't think is very hard to achieve. But yeah, I think credit ratings, like I remember getting a mobile phone contract just because that would improve my credit rating. And I think easily, or equivalently, there should be some stuff on chain that kind of builds that. But yeah, I agree that you can look at, I know you're a big advocate of Rabby Wallet, and they connected to the DBank, which is a great platform to check all that kind of information as well. And yeah, I think that there are definitely protocols and things that are building these on-chain credit systems, but I think there's still probably a long way to go before they become like widely used.
Yeah, definitely agree with that. My only issue with making the criteria so easy to achieve is that it's then still bottable. If it's just a month-old wallet with 3 transactions, that is still an easy to bot thing. I feel like if anything, and you're a new user who's been onboarded from Web2 in whatever way, you could have as a fallback strategy at least some Web2 social credentials that can be used to boost your reputation from the get-go, kind of how Gitcoin is doing that by allowing you to verify with a good amount of Web2 platforms to just boost your score a bit more. So at least if you don't have Web3 credentials that speak for you being a real person, that you have Web2 credentials that you can fall back to in using them.
No, I definitely agree with that. I think just having the optionality, like being able to choose, because being anonymous online is, a lot of people that are pro crypto kind of want that decentralized aspect and the anonymity. But there are a lot of people in Web2 that wouldn't really care. And if it gave them a boost to get that additional credibility on chain, then they'd probably do it.
Yeah, exactly. And that optionality then still remains. And if you want to stay undoxed and take more to build your on-chain reputation in an anonymous way, you can still do that. Look, I think this is an interesting discussion. I think this is actually one of the problems that this space still needs to solve. But we also need to get into the main headlines, starting with the Rug Radio Spaces. Tyler did comment on that, saying that Farokh crushed the Trump interview. Over 1.2 million people tuned in on that, and he went deeper into cryptos and NFTs than any Trump interview to date. What I actually found cool is, and I'm just going to cover some of the things that have been discussed in this interview based on this CNBC article that I'm sharing on screen. I found it pretty dope that they have covered it and basically have reported on what has been discussed in the space. More than 2 hours into Republican former President Donald Trump's World Liberty Financial launch event on X Monday night, the team behind the Trump family's new crypto project finally unveiled a key detail: who can buy the tokens it plans to release and how the shares of the project will be allotted, is how the article is starting. On the tokenomics, 20% of the project's tokens will go to the founding team, which includes the Trump family. 17% are set aside for user rewards. The remaining 63% will be made available for the public to purchase. No pre-sales, no early buy-ins, and also apparently the tokens will be non-transferable. And then the article goes on to saying that a lot has also been discussed on the perceived hostility of the SEC towards our industry, and several high-profile figures in the industry taking issue with Gary Gensler, claiming that he's regulating the industry through enforcement actions rather than via rules. So definitely interested to see that the regulatory aspect was covered as well. Additionally, it was also discussed that Trump shared basically a bit of his onboarding story and saying that initially he wasn't overly interested in crypto and that his children opened his eyes more than anything else. And I think didn't manage to watch all of that live stream yet, to be honest. I watched maybe the first 30 minutes. I know that you, Sammy, have listened to the whole thing, so definitely want to get to you to hear what other topics have been discussed, but also how you felt about the vibe of the conversation in general.
Yeah, I think I was surprised by the depth of knowledge of the guys that are talking on the space. I think that Trump's understanding was like fairly general. I think he's launched several NFT collections, and I think that the commentary around like his kids and what changed his view on crypto is quite interesting, because if you look at the previous like Trump empire, you've got his father who was in real estate, he's in real estate. I actually genuinely think that this kind of feels like the next evolution, or like a digital evolution of that Trump empire. And I think passing that on to the kids, and if they have a heavy influence into it, kind of feels like a next logical step. As for like the general take on like the tokenomics and things like that, I know there's very strict regulation around tokens being non-transferable, and they want to make sure they're compliant. And I think that makes sense given that they've got so much political spotlight on them at the moment. And I think that the idea around, I think, starting with a stablecoin business, now they talked about that as like a primary focus to begin with. If you look at how profitable Tether is, in terms of like a model with the low costs, it just makes sense to start with that. Like start with a low hanging fruit, build up some reserves and from profits from year to year, and then maybe branch out onto the real estate tokenization side of things, bringing their kind of previous business on chain. That to me kind of makes sense as the logical direction that it could possibly take. There was a lot of skepticism. And rightly so. I think that the NFT collections that have launched haven't really added anything to the space. So I think there's probably people that maybe believe, well, what's different about this? And I think Trump having that association with it probably doesn't help. But having listened to the space and listened to what they're talking about and the depth that they went into to talk about, they spoke about liquidity pools, they spoke about various other bits and pieces that were relatively technical, and they seemed to understand what they were talking about. which to me suggests they've done a reasonable amount of research. And to do that, to then just make a bag and leave, like it wouldn't sit, I'd say it wouldn't feel right. So I think they are genuinely here for the right space. Now, that being said, it comes down to execution as well. Like, you can say all these things, but if you don't execute well on them, then we've seen plenty of projects previously fall by the wayside. So I know recently there was discussion around them just forking, was it Doe Finance, which was hacked back in earlier this year. So I think that as long as they bring on the right people to make sure those instances don't happen with World Liberty Financial, then like that could be in a good place. And it looks like they're bringing on the right advisors. So I think they've got someone fairly senior at Scroll. They've got a few other people that they brought on as well. So as long as they give the right guidance and they're kind of genuinely interested in getting to know people in crypto and trying to uplift the whole space, and I think it could do reasonably well. And I think reaching out to Farokh to do this interview as someone who is kind of deep into the crypto Twitter world I think is a smart move.
Yeah, lots of points to digest and very great summary of the spaces. Also kind of connecting to the discussion that we had before. I mean, they managed to reach out to someone in Web3 who's actually has influence, carries weight, and is a good representation for that. One of the initial sentiments when that news broke around the DeFi platform was that a lot of people said, don't do that. It's a distraction. Focus on the election campaign. As you said before, fork of an already hacked platform could be a major reputational risk. Do you think that the sentiment on that has changed? Has your opinion about that project changed after listening to the spaces?
I think it's hard to say, because I think a lot of the people that are making those comments are probably more focused on, like, they're not necessarily deep in crypto. They're like, well, why is he talking about this crypto protocol? Like, shouldn't he be focusing on the political side of things? So I also don't know how involved he'll be personally. So I think he's got his own campaign that he's running, but he is kind of, it seemed like he was there to be on the spaces and talk about it from a high standpoint, but then introduce people who are more boots on the ground. And I think he has oversight, but I don't think it didn't to me get the feel like he was kind of there on the day-to-day operations of it. So I don't know in terms of how much time it would take out of his day from the political campaign. I do think, I mean, like anything, by spreading your attention, albeit not massively thinly, that there could be the risk that like things do fall by the wayside and he does miss out on that political like win. But I don't know, like to me, like I was going in with a fairly skeptical mindset, but I think the way that they came across was pretty positive. And like the arguments that they made sense around like the regulation, the legal stance around like the non-transferable token, and also having accredited investors. Like I know that you have to be accredited to kind of buy a lot of these assets. It's similar with the Biddle fund, the BlackRock fund. Like you have to be an accredited investor to buy into that. So a lot of this stuff just makes sense to me, but I guess because I have a traditional finance background, like I kind of understand it maybe a little bit more than the average person. But I can also understand why they'd be skeptical based on like all the recent grifts that have happened previously. They've had a lot of these celebrity tokens being launched. So I can kind of see the skepticism from crypto Twitter, but I think them reaching out to Farokh to do the interview as opposed to some random person on, I don't know, like a media platform, does make a little bit more sense to me, but I could be wrong. I don't know. I could be wrong.
Yeah, that standpoint makes a lot of sense. Probably the only thing that I would add, and then I want to go to Kusho, who has his hand up, is that even if he's not, boots on the ground involved in the operational side of things, the reputational risk at the end of the day still will remain attached to him. And as you said, the execution is what matters, and the impact of that will reflect back on him. That being said, Kusho, my friend, welcome to the stage. What are your thoughts on the Farokh Trump interview?
GM, I was very pleasantly surprised by how much depth that his sons showed, how much understanding of the space that they did have. And I think that probably comes from a background in finance, and also goes to show how much has gone into their ability to study and their ability to get educated, whether by having conversations or by going to school or by talking to people who know these things a little bit more. But that said, it's completely different from the execution of a DeFi protocol, right? Because, DeFi is a composite of like not just understanding of finance, but also the understanding of the tech in a very, very in-depth and intimate way that I'm not sure having a team or having a group of advisors will make up for. Like, that's just the way I think about it. And, I'm really looking forward to seeing what happens, but I'm also of the opinion that it is a big distraction to the election campaign. Like, I still think it is a distraction because there's apparently not really much need for a DeFi protocol. There's quite a couple of DeFi protocols out there already. So one more, yeah, not so sure about that. But that said, I mean, this is also completely separate. Their ability to talk about these ideas on a high level did show that they have at least a baseline level of, will I say, articulation that it requires to put a project out in crypto. So it's like one of these things where you see a founder that's very, very good about talking their project, and it's not really important to our space and to, more or less the speculation side of things if their execution is as good as their delivery of what they're trying to execute. And that delivery is what I think that they really have.
I also think that just on those points around some of the comments that they made that I thought were valid as well, just to echo something that Kushe said. The analogy that one of them, I can't remember who it was, but I think the older son that was around during the 07-08 crisis. And he spoke about junk bonds and how blockchain is it's so transparent that you might have been able to see those assets that were mixed up with AAA bonds that investors didn't really know what they're investing in. And I think the same could be said for if you put real estate on chain or like real estate funds on chain that have like a mix of other assets, then you can effectively break that out and investors can actually see what's in the portfolio. So they can make their own assessment. And I think having that immutable record was something that he alluded to as well, which I thought was it showed that he'd done his research. I think that there was a couple of other points that he made around sort of accessibility, and he spoke about people being debanked I think one of his friends was debanked in Texas or something. Or actually, yeah, I think Farokh said as well that maybe the CEO of thingy in Texas was debanked, and they start talking about that topic as well, and actually kind of pushing something that they'd personally been affected by, where a bank had literally closed the account, sent them a check, and said, "Sorry, we can't do business with you anymore." I think the ability to self-custody your assets kind of rang true, and I was like, okay, well, they're speaking from a place of wanting to make change. And I think there's a couple of things that they spoke about on there, and I think they've tried to get loans for properties before, and the bank said no, despite the fact that they've got more than enough capital in that same bank to cover the cost of the property that they want to buy. And I think that being able to access DeFi, where you don't have those same checks, where it's not really clear why they're making those decisions, that you can literally just take out a loan against your capital because it's all secured on chain, that kind of made sense to me as well. So I think some of the points they made it wasn't just like shallow surface level stuff. It was quite deep, and they showed that level of understanding that to me is like, okay, well, maybe they are actually going to try and make a difference to create this platform. So, but yeah, to Kushe's point, that it doesn't necessarily mean that the execution side of things will play out. So at least I think they probably have the right intentions, but yeah.
Yeah, that's a very fair perspective. Maybe a follow-up question on a side note. In terms of the launch of the platform, I've seen these commenting on that it's planned for end of November after the election. Was something said on that? Because I remember when we talked the first time about it, we kind of said that at least before the election is probably like one of the most attractive honeypots if you manage to hack that and create this reputational damage. It still remains an interesting honeypot for hackers, even if you launch after the election. But can you confirm that launch timing from the spaces?
I can't confirm. I wasn't listening attentively enough to work out if there's like a date that was said. But it's the interesting thing about the honeypot, because Dee's made a post on Twitter about the non-transferable token as being akin to a honeypot. So when you were mentioning that, I was like, okay, well, it's interesting.
Yeah, that's the different way to view that. Look, we've been getting quite financial with this discussion. And the next topic on Michael Saylor's MicroStrategy is also going to be a bit more financial. But before we do that, let's maybe get into the Web3 roundup first. There we have it. Going to share it on screen as per usual. In terms of some additional news from the space that we want to bring to you, we have first Binance founder CZ scheduled for release on September 29th, according to the Federal Bureau of Prisons website. Tether minting as a second piece of news, 1 billion USDT for 46 cents in transaction fees. Flyfish Restaurant, which we just covered in the beginning of the show, backed by Gary Vee and funded by NFTs, settling with SEC with a $750,000 fine for the unregistered issuance of crypto securities. In terms of more news, Gondi announced loan offers for art in auction on Sotheby's. A borrower defaulting on a 430 ETH loan on Fidenza, Xcopy, and NodeMonks. And last but not least, Eigenlayer's Season 2 token claim live. That's the one that we covered quite extensively, I think 1 or 2 weeks ago. The stake drop that also included rewards for creators. And I found that back then quite interesting from the perspective that they did not only cover people posting on X, but also video creators, podcast creators, people who posted on Farcaster. Our good friend of the show, Bread Guy, has posted himself that he will receive 4K Eigen tokens. I think pre-market price right now is $3-ish. DeFi Ignas posted that he's going to receive 6K. I checked this morning. I'm going to get a bit more than 2K tokens. So it's not a bad stimmy for having created content on Eigenlayer before the cutoff date for that was April 1st. Sammy, did you check already if you have any allocation from that?
No, I haven't checked. I definitely wrote stuff about Eigenlayer, but have I missed the cutoff?
You think so? Did you sign up or did you connect on the Eigenlayer Foundation? Okay.
I think I need to check, to be honest. I deposited money for Eigenlayer, but I haven't checked, to be honest, since I've gone back. So, but I've also I've not connected my Twitter or anything, so maybe I needed to do that.
I think you had to do that already in the past. So if you didn't do it, I don't think you can do it now. Might be wrong on that. Worth double checking, but this is to the best of my memory. But I found it still a quite interesting model, and curious to see if other protocols and platforms will replicate that. Anyhow, with that out of the way, let's get into the second piece of news. I'm going to share this CoinDesk article on screen. Basically, as we said before, MicroStrategy is intending to offer 700 mil worth of convertible notes. Just as a clarification, convertible notes basically a form of debt that a company can take, and those notes can later be converted into equity, whether that's in case of a startup in a phantom stock or direct equity in the company, or in the case of MicroStrategy, which is listed on the NASDAQ, in the form of shares. And what do they want to do with that? The company plans to use the proceeds of the offering to redeem 500 million worth of senior secured notes maturing in 2028, according to the press release. And the rest of the proceeds is to be used to purchase more Bitcoin, which probably does not come as a surprise to anyone. If we take a look at their aggregate holdings, they're currently sitting at 244,800 Bitcoin, roughly worth $14 billion US, obviously making them the largest corporate buyer of Bitcoin at that rate. I see Funky sending hearts emojis, getting excited about that news. Also, only days ago, before that news, they disclosed the purchase of an additional 1.1 billion worth of Bitcoin. The stock market on the short term didn't react very positively to that. MicroStrategy shares were down 5% during the regular trading on that day, and also another 1.6% down in the after hours trading. However, if we take a bit of a more long-term perspective, year to date, MicroStrategy is up 94%. 1 year, it's up almost 300%. It's up 288%. And if you extrapolate even further and go back 5 years, they're up 800%. One interesting thing that the CoinDesk article as a last thought on that also pointed out was that other public companies such as Semler Scientific and the Japanese investment advisor Metaplanet have followed MicroStrategy's footprints to issue debt to accumulate Bitcoin. So that convertible notes model is obviously nothing new, but issuing convertible notes to buy Bitcoin is definitely something that MicroStrategy has been doing massively and might have inspired other companies to do so as well. Curious to get your thoughts on that, Sammy.
Yeah, I think so. This is probably the third raise. I think it's the third raise they've done this year, and I think that from an investment standpoint, to get access to their debt, like you're guaranteed a certain interest rate, and I think that being able to be converted as an investor, you then get the upside if you then decide to convert it into the equity. So if the shares do well, then that's pretty good. So it's a very appealing offer for those accredited investors that are able to get access to it. I think that, MicroStrategy, it has just been, it trades very closely to the price of Bitcoin now. I think that is it's almost becoming an investment vehicle for Bitcoin, where those that potentially don't have access to the ETFs can then just buy MicroStrategy stock, and you get a similar level of exposure to the price action. So I think that, to me, is quite interesting. People know what they're getting with it. Like Michael Saylor's a strong advocate of Bitcoin. He's pretty open about that. So you kind of know what you're getting. And I think the whole refinancing of the debt, just keeping it ticking over and then plowing the rest back into Bitcoin, just makes complete sense with its kind of objectives and where it's going. So yeah, I don't think anything's changed over the past year. I think it's just more of the same. And I suspect there'll probably be another raise in 3 months' time after their next board meeting, because that seems to be when those happen. I think it was March, June, now it's September, so probably expect the same in December again.
Yeah, you definitely can set your calendar after Michael Saylor's BTC buys. Look, one follow-up question on that, kind of connecting it to something that Overarch said in the YouTube comments. Saylor is beyond leveraged, has the potential to be the most direct in history or the wealthiest man alive. GG's. What is the risk from the company side when they issue convertible notes to buy BTC, and what is the risk on the other side if you are a purchaser of those convertible notes? Really, really quick, in your opinion, Sammy, and then I want to go to Funky as well.
In my opinion, so the risk lies with the company, right? Because you are, as an investor, you effectively, what you're going to get on your bonds. It's a secured, it's a senior debt note. So you effectively get first dibs on the assets of the company if it goes into liquidation. Now, Overarch alluded to the fact they've got a significant amount of debt, but actually using that debt to purchase more Bitcoin, their assets are increasing as well. So I don't know. I don't have the debt to equity ratios to hand. And I know, I want to say, was it a couple of months ago? I think we covered it, where he made another statement about raising through, I don't think it was debt, I think it was through equity, like issuing new shares or something, to effectively bring in capital to rebalance that equation, the debt to equity equation, kind of make it a bit more solvent, but not as leveraged, sorry. So yeah, we know that he's long-term bullish Bitcoin, and I think if we all think that the structural changes mean that it's going to go to the right and up, then I think that he's in a pretty good position. But yeah, I agree. Like, he'll have to service his debt, and you have to make sure the operations of the company keep ticking over, and try and manage that in the meantime. Because if we end up just ranging for such a long time, then those interest payments are going to rack up. And I think from a company standpoint, that is probably a pretty big risk.
Yeah, that's a very, very good explanation. Thank you for that. One more point on that before I'm going to go to Funky. The most recent figure that I was able to find quickly is a debt to equity ratio of 1.38. So basically, it means that the total debt is 38% higher than the shareholder equity value. With that being said, Funky, sorry.
Just on that point, though, I think that that's at probably current market prices. Now, I don't know what the accounting policies are for valuing the Bitcoin, whether it's intangibles and there's been write-downs. But if the price does suddenly shift and we go back down to 20K, then I would be a lot more concerned.
Yeah, absolutely. That's a very good addition to make. Funky, I was 100% certain that you will contribute on this topic. So welcome to the stage, my friend. What are your thoughts on it?
GM friends. Yeah, I mean, I think you guys brought up some really great points, and this is actually one of the reasons why we will probably be de-risking from our MicroStrategy position over the next, 6, 8, 12 months or whatever. We originally bought MicroStrategy in October of 2020, shortly after Michael Saylor had announced that they were going to start buying Bitcoin, as we were loading up on different Bitcoin things in our Roth IRAs. And, I've been very happy with the performance. Obviously, goes without saying, took a little profit in that first big, like February of 21, sold some of the shares. Now, since the split, we have hundreds of shares, so I can actually like write covered call positions against them and so on and so forth in my cash. But I am starting to get worried about, the amount of leverage, the amount of debt that's getting racked up. And so that's why I would warn anybody, of course, not financial advice, maybe don't rush out and buy shares. It could be something where, especially if they do issue additional equities and so on and so forth, you're going to get diluted, all the other problems that you guys pointed out as well. So in fact, I even had a limit order before the split that was at 2,000 a share, and it literally one morning got to 1999.99, and my limit order didn't trigger. And then it started tanking again. But then since the split, I've kind of made up just writing those covered calls. But it's something that we are just very being mindful of and trying to probably scale out of the position, and then probably just keep the rest as sort of a moon bag in the Roth IRA. But it is a little disconcerting as someone who tends to be a little bit more on the conservative side to see them continue to pile on a balance sheet. And it's an asymmetric bet, but it could go wrong too over the long term.
Yeah, very, very much agree with that. Again, nothing that we say is financial advice, but I definitely wanted to cover the risk side as well, to understand that from a conceptual standpoint. I think Overarch in the YouTube comments summed it up perfectly. We've been going a bit technical with this. Overarch said he's generally betting on BTC going up, which is hella risky. I think that is a perfect summary of what we've been discussing. We have 5 minutes left on the show, so I definitely want to touch on the last headline of the day. We said it before, DeGods are down a bit more than 20%. If we look, that is for the NFT side of things. I'm sharing that on screen, the chart on Bird Eye. If you look at the token's also down 19.4%, so also 20% over the last 24 hours. Obviously, no surprise that after being able to convert DeGods for the token back and forth, that the price movement goes hand in hand. Maybe abstracting a bit from the price, Sammy, my question to you would be, so we obviously said yesterday, we discussed the announcement for quite a good amount of time on the show, that DeGods are good at getting the attention, at focusing on building the community, at getting the distribution right. And the attention game is the same, no matter if they have an NFT collection or if they have now the DeGod token. But do you think that the attention game for them will be easier to play with the token than the NFTs, or do you think that this doesn't really make a big difference?
It's really hard to say, because I think that like an NFT, you can wear it as a PFP, you can rock it. I think there's been a lot of debate around what about all these high valued UTs that we can now burn, but we get like barely any DeGod token for it. And I think you've got a lot of different parties now to please, as well as this token to try and do. So I think in the short term, it's going to be a lot more work for them. But I think in the long term, if you're able to kind of remove the number of UTs, because you can't actually redeem those back to UTs once you've converted them to the DeGods token, you're kind of narrowing down the number of different assets there are. So it allows you to focus that attention. And I think if you then start enabling people to maybe use some of that DeGods token for various benefits, and I know they've had Dust in the past, and they've had the that raffle system that kind of was canned as well. I mean, and they're not afraid to like pivot and try different things. But yeah, I don't know. Like I think initially it's going to be a lot more work just to try, and because you're going to have a lot of different parties to please. But if they manage to execute and get people to move towards a token, then you've just got one kind of group of people to please. It's less things to focus on. And I think ultimately, if you can focus your attention on it, you probably have better outcomes. But I think it's going to be a little bit of pain in the short term.
Yeah, I do tend to agree with that, especially given how basically focused X is and how visually that connection shows with a PFP that kind of goes away. I mean, it doesn't go away for the original holders. Will probably still be able to rep their PFP even if they convert. I think Cyrus converted his DeGod and is still repping the PFP. Although, isn't he on the Pudgy arc right now? That is his. Let me look it up. The Pudgy that is inspired. Yeah, he's on the Pudgy that is inspired by his DeGod. So maybe not a good example to choose.
But does that mean that, because it's a DeGod day, does that mean that if he redeems it for the DeGod's token, can someone else randomly end up getting his DeGod back?
That's a very good question. I don't know the answer to that with 100% certainty, so I'm not going to speculate on it right now. But I think for like the existing community, they can keep using the PFPs if they want to. But if you are someone new who is joining and onboarding, and you're part of the like DeGod family or community, that might be a bit harder to find a visual identifier with, especially as again we said it yesterday as well with the youths. It isn't a back and forth conversion. The youths simply will get burned, and that process cannot be undone. Sammy, any final thought on that? We have 1 minute left in the show, and then we'll wrap it up for the day.
No, I mean, ultimately, it's still within the way they've operated. They're trying some new shit. So I think they'll learn, and if it doesn't work, they'll pivot again.
Yeah, fair enough. And maybe they will bring back the youths. Who knows? They are definitely, I said it again, if you're part of the community, you're part of an experiment, and you got to be okay with them pivoting also in opposite directions sometimes, and trying out new shit, as Frank is saying all the time. With that being said, that brings us to a close of the show. Thank you, Sammy, for stepping up and joining me in the co-host seat today. Thank you, Funky and Kusho, for joining us on stage as well. Also, big shout out to Overarch, Kashmir, and our frequent YouTube contributors. Thank you to everyone in the audience for joining us today. And we will see you again tomorrow at 7 a.m. Eastern Time. In the meantime, have a great day.